Hey guys, it's Bowser here with Penny Stock Data Science, making another video today. I am using a new microphone, so if the sound quality is better, please, leave that in the comments. And remember to hit that subscribe button. The more people that subscribe, the better content we can put out there. So today I wanted to talk about GDVM. It's been a popular ticker for a couple of months now. Not too much action the past few days. We did see quite a bit of action over the past 2 weeks. There's been a lot of activity on Twitter, especially from John Kent Brokerage, been tweeting this play out for months. I think maybe over the summer. And if we take a look at the chart, we can see it has been very, very popular for quite some time. We look at the 3-month, 6-month chart. It started out August 22nd. I think this was not in the trips, but sub penny, just climbing, climbing, climbing. There was some share cancellation somewhere here, but you look at this big walk up, good volume here, low volume. I'm not super familiar with every single detail. They're doing something with, I believe the company is VMost, and you can go on Twitter, you can find out more about that. That's not really what we're here to talk about today. What I'm talking about today is that after this big walk up here into around 10, 11 cents, we see this big red candle here, and it's probably 50% of the price since then. We look at the 1 month chart, but what's really important to talk about here is that on this big red day, a lot of people upset on Twitter, a lot of people upset on Discord about short selling, and that's what we're really here to talk about today: short selling. We did see, a prominent trader, Nate from Investors Underground. If we scroll through here, we'll see that he was tweeting this out. Yeah, so if you go onto Nate's Twitter, you can see he's been tweeting with GDVM here, here. He's implying he shorted it. I think up here he says, yeah, he shorted it, and just a lot of people upset about this. I mean, we finally see the OTC getting better, and then a play like this, just a blip, not 50% haircut right there. But the big thing is that he tweets out that he shorted center point. But if you go on Twitter, Discord, whatever, so many people don't understand that you can short OTC and it happens on a regular basis. Some people just mind blown on that. I'm not sure how, but this is what this video is about: short selling OTC. So a lot of people upset, a lot of people tweeting at Nate complaining. And if you can short something and you think it's a good setup, by all means go for it. It's just not really feasible for the average trader, but we can take a look. So center point is one of the popular places to short small caps, OTC, etc. They have good borrows on a lot of the hard to borrow stuff. The only thing is that it's expensive. That's why most people don't short cheaper OTCs, and you don't really see any retail short sub penny, because if you look here, this is just the commissions, and that's as low as, so it's probably going to cost more. So if you're going to short something, even something like GDVM where it's 6 cents, 10 cents, whatever, that's pretty substantial, and it's probably going to be higher. And that's not even the borrow rate. That's just the per share commission. Then you have to borrow the borrow fee and all that. But if you're trading very, very high amounts, you're probably not going to be paying a lot in commissions, a lot in borrow fees. You're going to get some kind of discount, which is why guys like Nate, who trade a ton of shares, probably is cost effective for them to do this. But for the average trader, it just is too expensive, and it's not really realistic, at least on the cheaper OTC stuff. Now, if you have something maybe closer to $1 or $2, yeah, that'll make sense. But sub penny, under 10 cents, that's not going to make too much sense. And center point is where Nate tweeted that he shorted. I know other people who use this brokerage, but there are others. We have Interactive Brokers. They do a lot of short selling too. Maybe not as many hard to borrow stocks or OTC as Centerpoint, but they're up there. But it is expensive. Same thing with Guardian. Here's the commissions, 0.0015 per share. That doesn't make sense for a sub penny ticker. Doesn't really make sense for a lot of stuff, but people can do it. And if you're getting some kind of bulk discount, then it makes a lot of sense. It's just very, very expensive for retail traders. But for market makers, they can pretty much do whatever they want. So if you're looking at level 2 on a penny stock and you say, hey, I think, AACSM is shorting, or PAUL is shorting, I mean, there's a good chance they are. And for them, as long as they're following the rules that have to do with trade settlements and all that stuff, T+2, all that, they can pretty much do whatever they want. It's a little different than your average retail trader or a retail trader with doing a lot of volume, where you need to actually get the borrow and pay for it. It's different. But it's the same in the sense that people are shorting OTC. So be aware of that, understand it, and it might be something you want to try in the future. That's all we have for today. Please make sure you hit that subscribe button, and we'll be back with another video soon.